The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome, folks. Tom O'Brien, Steve Rhodes here with you. We appreciate you growling and prowling out here with us. Right now, you get the Dow Industrials up 30, Nasdaq's up 7, S&Ps are up 3.5. We have gold flat at 1330. Silver is at 2015. And the bonds, folks, okay, you got the 10-year over the B point, has the juice behind the move. These bonds are a trip, no doubt. Rates are going down. The 10-year right now is at 2.376. You can expect that. We're going to see about a 2.2, which is just going to be an absolute mind blower. Steve Rhodes, what's going on?
Hey, nothing but markets moving.
It's a
That's what's going on.
It's a beautiful thing. And folks, this is going to be sweet. There's no two ways about it. Get over to our website at TFNN, and you can hit the data expander on the top, on the side. Bring the account up. They'll put $25,000 of funny money into it, and we're going to walk you through these different contracts. When you take a look at the S&P, this is like heaven on earth, folks, for traders. Last night, the futures got down to a price point of $18.90, and what do? They come all the way back up to ICE, and they go smack right into the downdraft that had been created at $13.40 on the 5th of August. And that number, folks, it's just pretty amazing. That number, 124,000 contracts, and we get into that with all of 16,000 contracts. Like, see, you don't want to be you've already got the confirmation today that this baby's going to sell off. Why? Because we came down at 0930 and at 0940 with 77,000 contracts. Okay, so this market just can't hold price. It's a beautiful thing, man.
No, we know that we know that the sellers, we know that the bears have been hanging out, and this week especially, every single rally has been sold.
Oh, big time. And the numbers, folks, they're just banging off these numbers. And specifically what I mean, you do the ABC structure on the way down, even intraday. You come back, you do the retracement, you get back up to ICE. It has no volume, gives it up once again. And all that's doing is creating larger ABC structures on the way down. This one right here, if you take a look at the future, where the A point is 1924 and your B down there is at 1890. Yeah, so that's 35 points, man. That's a beautiful thing. 35.
Yeah, that gives you a price projection of about 1878.
Yeah, oh, there you go. So the 1875 is your larger ABC down. And it's awesome, folks, when you get two separate ABC structures that are giving you confluence inside an area. That's how this baby shakes out. So we got action, no doubt. And you know what you have here also is that coming into a Friday, let's go over to the DAX. If we look at the DAX, folks, the DAX broke the lows out here today, trying to make its way back. I suspect it's not going to be able to handle it. The lows the DAX got to 89.03. It broke the 89. It broke the 89.13, which was the March 13th level, March 14th level. But what's so cool about this is that the correlation inside the DAX is like the NASDAQ. The low in the the February 5th and February 4th area for the DAX was 9071. The NASDAQ had broken that, come all the way back, went over the highs. The DAX did the same thing, which is just a mind blower. It's like, how did you do that? How did you not only basically get over the highs, you got over them pretty good. Well, bottom line, it's underneath them right now. You had the juice yesterday. We'll see whether they get that follow through today. I expect we do, though. And when you do line up the DAX, and this is a heads up just for the markets in general, the DAX wants to run to 8,000. So that's a long way down from 9 when you're talking that small number. You know what I mean?
No, and what's interesting about the DAX is that, it had been traveling in a pretty good consolidation zone. And that consolidation right in about the 89.50 level. So that was the bottom of the consolidation.
Yes.
And the top of the consolidation was back at the January highs out there. And you're right. When it broke down and created that little swing point on March 13th, it made it all the way back. And then it went ahead and gapped up above that top of the consolidation back on May 26th. Whenever you break a consolidation or break anything, right, you like to see it do it with some type of wide price spread, accelerated volume.
Sure.
And it did that on May 26th, and it was an absolute failure. Of a pattern that should have broken out. Now, like you're pointing out, it's trading into that March 14th swing point. If it breaks that, what that sets up the consolidation pattern maybe to the downside, or that measured move price projection, which is from 89.50 to 97.50. So what's that it's really more than that, but that's a good 800 points. That's a big move.
And folks,
that takes 8,100 into play.
It's huge. And if you're up on the Nadex platform, if you're looking at those S&Ps, so check this out. So on the S&Ps, if you look to the spreads, if we're dealing with the spreads, there's a lot of different spreads out there. You get the 10 to 12, 8 to 4, 9 to 11. But if you take a look at this 8 to 4.15, giving yourself some time, this gets really interesting. And this is what it is. It's a 30-point spread. The top of that spread is at the 19, well, there's a couple different you can get. The one I'm dealing with right now is 1910, because the S&P is at 1908. You're giving up like about almost 4 points. But here, so let's bring that up. So you'd be selling it out. You'd be risking, in this particular case, it's pretty interesting. So if you got the full projection, you'd be risking about $57 for 243. Now, if I bring this back, we have the volume on the spike. What you'd love to see, 1911. Yeah. What you'd love to see is one little more spike up to 1911. And what you have is this, is that at 10 o'clock, that little spike up there, you'd like to see that spike get tested. Because if that spike got tested, this contract here would be about 1906, which would really sweet, because then that would bring that risk down to about $45 for 280. So there's a lot of different contracts. What I suspect you want out here, and I like trading the ones that are 2 hours too. But today, what I'd like to wrap my head around is that afternoon one, and the reason being is that the sell-offs have been dramatic coming into the afternoon. I expect we're going to see the same thing today. At a minimum, right, you would expect, if you just simply take a look at the bounce off the lows this morning at 4 o'clock. Yes.
So, the bounce from the low off of this morning up to the high that was put in here at 850, at a minimum, just based on prior pattern behavior, you ought to expect at least the S&P to get to 1899. I mean, it's we're at 1906
sure.
right now, so 7 points. But that's nothing more than just a 0.618 retracement of that move.
Right.
So at a minimum, whether it breaks the early morning lows or not today, from an Nadex trading standpoint, I would say the 1895, 1899 area, would be one of the trades that you would look at if there was a good enough trade out there.
Totally. Now you talk about a beautiful thing. That's
it's just kind of natural. I mean, that's just a normal movement on anything that could happen. You would expect at least that to happen.
It is.
That would be my expectation.
I'm with you. And for folks, if we go over the bond market, you go into those 10 years. 10 years, we've already done 1.1 million contracts. It's a monster ABC up. You're at 126.08. 128 is on the agenda out here. Let me just see that TLT is a monster ABC up. Yeah, that's going too. It's going to be interesting watching this whole thing shake out. The 30-year is absolutely amazing. The 30-year, just, you're at 139.30. Hit 140.11 today. So you got to remember, on the 30-year, ICE is set up at the 142, 143 area from the downdraft that had been out there since May of 2012 rather. That's all that is. Well, my take is that we're going up to those highs, but you get, whether you're a bull or a bear, the 143.11 could be considered just still a dead cat bounce, just so you understand how that shakes out. What we have had, though...
And still, that's a pretty good move. Just back up.
Oh, it is. It is. And, you talk about rates. The 10 years at 2.38 today, So that's going to put the 30-year mortgage under 4. That's going to put forget the 5 and 15 years. They're going to be like heaven on earth, man. It's pretty amazing. It really is.
You've got some rates on some mortgages that you're paying out.
Yes, on the we do. And in fact, if you...
As long as we're talking about rates here.
As we're talking about rates, if you come over to TFNN, folks, and on the right-hand side, you'll see the Tiger Real Estate Opportunity Fund. I got about 6 left, 6 beautiful, brand-new places, all leased out. We're refinancing them, and the way that it works is that it's a 70% loan-to-value with a third-party appraisal. It's a 4-year program. If you don't need money for 4 years, folks, or you're in the CD market, we're paying 5%. You're totally secured. There's a title search. We pay all the fees, and it's paid monthly. The sweet thing for many folks, I know when I was raising money for the fund, monthly income is totally where it's at. If you look at this market, bottom line is that you want somewhere to tuck your money for 4 years, it's not a bad place to tuck your money. What also it happens inside that is that we are guaranteeing that you will make the 5% for 18 months, even if we sell the place. I don't expect that we're going to, but with rates this low, this is what does end up happening. Like this morning, I put 2 places up for sale yesterday. Listen to this, folks. This is how hot this market is right now. I put 2 places up for sale yesterday. I'm at home this morning, and people are calling because I have my cell phone on there. So there's 3 separate offers coming in within... Well, it's not even 24 hours, and I just got off the phone with one guy. He says, I'm coming in over the offer. I says, okay. Isn't that funny? I mean, and so it's going to be interesting watching what's happening. And a lot of that, there's a couple different things that end up happening. They're beautiful places. They're new. But it also has to happen when rates get this low, this quick. That is important to understand.
Yes.
And depending where you are, if you are selling real estate, what you want to do, folks, okay, is get a bidding war going. So it's always a square foot deal, and it's an appraisal deal in this market. That's what it ends up coming to. So it's going to be interesting watching this thing shake out. But if you do want to take advantage of the first mortgage program that we have going, just go to TFNN, hit the Tiger Real Estate Opportunity Fund. You'll see how it works. It's real easy. Bottom line, it's a decent monthly income for a good period of time. So
that's a beautiful thing, baby.
It is, and it's interesting. The whole thing is really intriguing, and I think inside the banking structure, there's going to be a lot more people than us that are doing something like that, because all you're really doing is cutting out the banks. You're going right from the product right to the person. Instead of 1%, you're getting 5%, right? You stay right there. Steve Rhodes, Tom O'Brien. We're coming right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box.
For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 18. NASDAQ is flat. S&Ps are up $1.50. And so, hey, Steve, we finally got a trader's market out here, huh?
Oh, a big one, a big one for sure. And, you know, that's where really utilizing technical tools out there, different technical skill sets, is really helpful for somebody that is trading from an intraday basis. You know,
absolutely.
As, you know, if you're just simply a buy and hold investor, then the time period that we're going through right now has to be a little bit frustrating, concerning, or what have you. But wide, you know, huge swings during the day. Huge swings.
You know, it's wild. And folks, this is what blows my mind. I was thinking about this morning, right? That you hear on a continual basis that the market's not going to go down. And when I hear that, it's like, this is amazing. So this is from people that are in the business on a, and you know, they're normal people. But the problem is that they can't say the market's going down because they only make money by getting more money from clients because they make a percentage of the money. And that's how the whole business is structured now, folks. Okay, it's, you know, it's not making money on trades anymore. It's making accumulation of money that they have to have people send the money in. And I'm sitting there having a cup of coffee this morning. I'm saying to myself, this is absolutely crazy. Could you imagine waking up every day thinking that you have to tell people you have to put your money in the market, right? It's like insane. And the insanity part about it goes like this, that a normal retracement, just a normal retracement in the market is normal. It's not so abnormal. So what I can't get my head wrapped around just yet is this, is that how do they get away with it and how do people believe it? You know what I mean?
Well, let's face it. Managing money is probably one of the most difficult businesses out there.
Oh, sure. Right.
It's the one with the least amount of education. That's it had been the one with the least amount of education. Because of an individual's name is Tom O'Brien. Because of an individual like Tom O'Brien, who's now got the Hotel California built into the e-signal platform, and with 10 hours a day of live programming from different technical analysts that utilize their own take, their own view on the marketplace. There's so much education now that's available to folks, which wasn't there before. Now it becomes, it's when for you and I, we use these terminologies, even just using the terminology of a swing point,
right?
And for us it's common language, but for somebody new that's just tuning in, becomes, it's a learning curve. There's no question.
There's no doubt about that. There's no doubt about that. I guess, and what I'm saying is that in a larger context, I just have but this is how history is, folks, okay? You can go back. It doesn't matter whether you go back to the 1930s, if you go back to the 1870s. For some reason, everyone always thinks that, well, no, it's the fear and greed deal. And it just doesn't have to be the marketplace. It can be the tulips. I mean, there can be other things. It's just crazy that it's like that. You know what I mean? That's my point more than anything. It's like, wow,
Well, it's about positivity. So the larger money managers, they have no, it's very difficult to sell the negative.
Right. Oh, no.
But the way that you certainly would do it would be if you would say, hey, look, there's natural harmonic patterns in the market.
Right.
And so, if your thinking is that this is still a bullish buying opportunity, then just by simply knowing some swing points and areas to look at, you'd say, okay, if you want to put more money and you're going to do it in something that's indexed to the Dow or something like that,
sure,
you'd say, okay, your target area to come in is probably around 16,024, somewhere right around that level versus right here in the middle of when price is below its 0.382 retracement level.
No,
if you were just going to have just simply that theory, and then you can just simply say, hey, watch how price is moving down into that level. Like you say, if selling is expanding and people are getting out the doors, and wait for the next floor.
No, totally.
On that elevator.
That's right. And as Steve's speaking right now, folks, you're basically backing down. You're at 1904. You're backing down into the sign of, well, it's not a sign of strength, but at 710, that number there, that's where that 1900 is, and it's like that wants to go after it. And it's so cool. Let's say so.
The low of this morning, that 4 a.m.-ish type low is a very important low.
Yeah.
You get that taken out, and it just giving you another clear message that 16,000 level inside the Dow, that's really the next area. That's the next area for you to pay attention to.
Well, and what's amazing, there's no doubt, and what's amazing, folks, okay, you can basically take a look at UTX, you can take a look at Boeing. They're having problems holding those February 5th levels. Yes. You stay right there, folks. And don't forget, all the programming at TFNN, get it right on your cell phone, TFNN.mobi. Steve and I are going to be coming right back, folks. Dow's up 4, Nasdaq's down 5, S&P's are flat. We're going to be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 2, Nasdaq's down 6, S&P's are flat. And if you haven't test drove the Nadex product yet, folks, come over to our website at TFNN. You see the banner on the top, on the side. You can hit that banner, bring it up. They'll put $25,000 of funding money into your account. And as you've heard that commercial, your trade is your stop. And that's what makes the product so dynamic, particularly you folks in a market you have nice volatility, which we have. And I expect what you're going to see is this volatility is going to continue. You know, when volatility comes in the market, folks, most times what you have, it just doesn't come in and disappear. You know, it comes in 3, 4, 5 months, and then it will calm down. There's no doubt. Because one of the main things that you want to wrap your head around is this: is that coming off the highs, people say on a continual basis, yeah, you don't want to be selling highs, you want to be buying lows. My take is just an opposite take on that. I think coming off the highs is sometimes the easiest trade. It's going to be the next trade that's harder, okay? Meaning specifically is that after this bounce, when you bounce back up, where do you put the position on then? That's a harder trade to me than coming off the highs, you know. But it's going to be intriguing watching where this does go, because what we are going to see, you know, you're going to see bounces in this market, you know, so.
And I think you're going to see, it would only make sense, at least this my thinking is we're going to see some large bounces.
Yeah, oh,
and
absolutely.
They're going to be the kind of bounces where people are going to say, okay, the correction that everyone was looking for is done. You know, it's a done deal. And that I suppose is perhaps some of the thinking behind you're saying that's going to be a more difficult bounce to sell.
Yeah, as to where to sell it. Exactly. Yeah. You know what I mean? Yeah. It's where you're going to put your back against the wall. It's easy when you're at highs because your back against the wall is on the other side of the highs. That's it. We consolidate up there for a long time. It can be wrong 2 or 3 times. Big deal. And that's it.
Yes.
And then it just falls apart. Yes. Where the correlation on the, you know, the bounce is like, okay, what are you going into? And what you hope is that you're going into a high volume downdraft. You know, if you remember, if you're around 2007, folks, one of the largest days was a bounce of the Dow was 1,100 points walking in the morning, and that was awesome.
Yes.
That was just incredible because, you know, depending whether you got the bounce or not. Bottom line is that that was an incredible trading day because it opened up and then sold right off again. It was like insanity, So.
Well, the nice thing, back in 2007, let's say there's the potential that what the market's done here, has made the same type of a top that we saw in 2007, 2010.
Yes.
And the reason why I say that is because the same pattern that was present back at those highs, at least in the Dow, and in I think the New York Stock Exchange, I'd have to go back and take a look at it. It's a similar topping pattern that is out there. What that means, Tom, is that July 31st date, when price came off those highs, it totally changed the dynamic of the monthly chart that we were taking a look at least from what I take a look at it, and similar patterns that had made highs in the past out there. But the good news is that if you just simply utilize, some retracement levels inside of the New York Stock Exchange, it made an exact 0.786 retracement after its real first move down. After it formed an A to B equals CD, its first move down, which took it back into November of 2007. In fact, I'll put it on the screen out here so people can see. And that's where utilizing just simply some of these rulers that we use, these measurement tools that we use. So inside the New York Stock Exchange, it had its real big downdraft day on November 1st, 2007. And that's at that very first move down into a low on November 26th. And if folks just went from that high to October 31st to the low that was put in on November 26th, the 0.786 level was 10,129. Now, when we take a look at our backs up against the wall, when you're selling highs, because you're stopping out when price moves above the high out there,
right?
Within a
reasonable time, right?
Yeah, and so in the case of Fibonacci analysis, really all we'd be suggesting that people do is just adjust their position size. We'd say, hey, the place to take the short position would be at the either 0.618 or 0.786. In this case here, if you're using the 0.786 level, you're saying that your stop needs to still be above that high that you've used as your benchmark for your ruler, for your 100% level out there.
And that's what's so cool about the 0.786. I love the 0.786. Because what does happen, what Steve's saying, folks, and this is what, depending on how long the actual trend is that you're looking at, a 0.618, in order to get from the 618 to the 1 is like, sometimes that's way too far. You know what I mean?
Exactly. Yeah. But you can take the approach. You got a couple different approaches. From what I've turned people onto, perhaps one of the things the most was that just focus on first position sizing.
Yes.
Because a lot of times you'd find that people were so totally over leveraged on their trades, and with this being the money business and not being taught, in a lot of places out there, you weren't really sure, well, how many shares do I buy?
Right.
And to me, the easiest thing is to say, well, let's just step back a moment, because this is a math exercise. Take your total investment capital. Don't risk more than 1%. If it's $100,000, 1% says it's $1,000.
Right.
That's all you're, in essence, really risking on the trade. Divide that by your stop, and your stop is just figuring out what's the, where are you entering, and where should your stop be. And in this case here, you can use just simply retracement levels. You can, there's so many different ways that you can use that, and then, if you get stopped out, and you come back and you fire back when you get that next indication of where to go short or long, whatever trade it is that you're doing. And if you do that, you're always going to be in the money game. You're always going to be in this business. You won't be over leveraged.
And just as you said, you have a full plan in place. You have a plan in place, folks, and that plan in place gives you the numbers where you want to get in, where you want to get out. What is the price projection that you're going after? Which is just dynamite.
Yeah, and that's also the beauty of the Nadex platform, right? You ask people to, and they should come over. They should test drive the Nadex platform. They should get a feel for how it works. No one in their right mind is going to go all in on any one Nadex trade. Well, why would you? And your stops are in place, right? You've got both sides of the trade, in essence, protected.
And what happens, which is so cool, is that what happens in the aspect of, let me just put this one up right now. So see, this is happening right now. So right now, you get the S&P at 1910. Let me go over there. This is one at 4 o'clock, right? And so we're looking for a test of that spike from 1010 this morning. And it's not there yet, but it's getting there. But so when we first looked at this, so now you're down to a $48 risk for $252. It's not ready yet. You want it? Oh, here it comes. It's coming. It's you just sit there and wait, man. That's the essence, and we're right next to it right now. So okay. So it's coming. Yeah, 1911.25 and 1910.25, and what that just did, that puts it now you're at $44. See, now.
Now, in this case here, because you're going to make it on a 10-minute basis, would you wait for the full 10-minute bar to close?
What I do is this. You know, it's so funny, folks. I use my phone so much. So we're 2 minutes into it, and and at 2 minutes into it, it's got some juice. So 2 minutes into it now, I say, oh man, hold it. You just might go hit the 1913, which would be really freaking great. Excuse my language, but
that's okay.
You know,
that's okay.
It'd be awesome. And it's the benchmark. Well,
and likewise, you know, if it hits that area and it clears that, you say it's coming in with juice, right?
Yeah.
So if it clears that 8:50 a.m. swing point, and it does it with volume, it could be setting up an A to B equals C to the upside.
Yeah,
for your next trade.
It would go in 1922, exactly. No, absolutely, man, absolutely. You just sit there and you wait. And right now we're at it. We are at, we just hit it just a second. We hit it right to the spot, too, 1911.25. So you're at 23,000 contracts. You're dealing with 58. So so watch this. That's saying, folks, that we are going to go to the high. You wouldn't do it right now because that's saying, number one, we're only 3 minutes into it. You're going to get the juice on that spike. But now what it's saying is that it'll get up to the 1913, and then you're dealing with the 1913 right now, and at that aspect, so now I'm down to $38 for $262. See, this is the contract. This is where it's picking out the contract too, folks. Because what's going to happen here is this: the contract itself, the top of the contract of the box is 1910. So you're going to be out of the money, okay? But what I like to see is that we only out of the money $2 or $3. It doesn't matter on these because you're going to give up $2 or $3 anyway. What it's going to do is bring your risk down dramatically in the number that you can lose versus, and as that risk is coming down because you're dealing with 30 S&P points, your reward's going up on the other side. So
yes.
You know, you can do a couple different things here. See, it's underneath it again. So hey, we're gonna know pretty quickly. You know, don't forget, folks, at TFNN, all the programming get live at tfnn.mobi. If you want to get right on your cell phone, you want to get Tiger TV, just go to tfnn.com, and you're going to see the TV right on the right-hand side, and you can hit that. You know what's so cool, Steve, is we're doing the program. I have a Tiger TV up on the other side, so I can see you simultaneously, too.
Okay. No, it's great.
It is. It's really cool.
Pretty amazing from when you first started out to where you've grown it today, huh?
Oh, there's no doubt. Listen, I remember the first time that I had to get the bread together to get the first camera, because the first camera, folks, the first camera in the first just set up inside the studio when we were a lot smaller, it was like 18,000. It was like, oh my God! But I'm glad I did it.
Yes.
It's just funny how it goes.
Look, when I opened up some retail stores at Epcot Center. Back in 1999,
right?
And I bought what I bought was it was my employees that were operating with inside a Disney retail store. Now, a customer wouldn't have known the difference there. In order for me to really justify my existence, I had to always be better than what Disney was doing, and then that means I really had to produce more income. I had to be more efficient. So I bought my employees wearable computers. So this is back in 1999.
Wow.
They were computers they were belts that really strapped around their belt. They had small little screens, much like, a small mini iPad.
Well, I told you, man, I was in one of your stores. I got that thing done. I remember that. This is so crazy. When I met you, I really remember it because I remember those things are running around their waist.
That's right. Exactly. Now, I think so you're talking about 18,000 for a camera. I think I spent like $6,500 for each of those. And I had a bunch of stores and we'd have, several employees at one time that would be working. Right. But it was a way to be efficient because our folks would have to take pictures. They'd have to match pictures to the order. They would be customized. But it was a beautiful thing back then. And so, but technology, it's you have to invest in the technology at that time and just simply utilize it.
Oh, that was one of the best decisions I ever made, no doubt. You know, it's just, you know, no doubt about it.
And now take a look at the cameras that we use,
right?
You know, for exchanging,
right?
And,
and now, folks, you don't. There's 3 separate cameras just inside this one studio. Never mind the actual other studio, you know, with that it runs everything. Now it's going to get cool on the S&P, folks. You just sit there, wait. We're at 1913, so the number up here is 1913.26. This is going to be interesting watching this shake out. So that's 7 minutes, and I put this on the other side. You're dealing with 71,000 contracts at 1912.75. Okay, so the characteristic, all I do, folks, by the way, is just put crosshairs coming across. So it's you're coming into 10:50 yesterday morning. Right now we've done, let me do this. I'll put this in 2 days so I can see it a little bit clearer. Okay, so that's 4,700 rather. That's 6,300. I'm liking this. Okay, 1 second. Let me get this set up. Now, this is going to get a little dicey, but let me see. Where am I? Get this up here, baby.
We got to get a little tool for you on your application, so that when you're into a bar, off to the right-hand side, it's doing the automatic calculations of what the projected volume might be.
Yeah, I know.
You know, for the next 10 minutes.
No, totally. So check this out. So now you're at a $35 risk to make $265. I like that. I'm going to still let it get right to the very top, though, which is the 1913.25. That extra, well, 2 different things are going to end up happening is that at that level, you get 2 minutes left, and hit that right there. Now I get $31. I'm taking the $31. $31 for $35. Okay. Not yet. This is funny. Well, you know what happens here, folks, okay? I'm still, it looks like get a minute and a half, and this is hanging up there, and I can see it expanding.
And you're in the swing point, right?
Yeah, so, right at the swing point. Right
until it tags it.
Right at that swing point, exactly. And we've hit 19, I guess it's already actually hit it. This is where it gets interesting.
Yeah, but, you know, it close inside
35.
it. Yeah.
Okay, so it's $35 risk for each 265, and it's at 1906.50. It's going to be interesting here watching this shake out. Steve Rhodes, Tom O'Brien. Our phone number, folks, is 877-927-6648. We go over to the Dow Industrials. We'll take a look at the Dow and see what's inside the Dow. Home Depot, Caterpillar, Walmart, CVS is bringing it up. Bringing it down is Microsoft, United Health, Verizon, and Big Mac. Steve and I come right back, folks. You stay right there. Dow is up 55, Nasdaq's up 7, S&Ps are up 5.5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Well, I guess cereal, folks, is out for people eating.
Yeah, that's a horrible looking chart, is it not?
Man, this is post, and you know it had a high out there of 60, folks. Had the first leg down. Today it's getting absolutely destroyed, down 856. But the thing that's wild, you know, what you want to look at this thing is that you're going to see this in equity went up with no volume. It's going to go to $31, man.
Yes.
I mean, 31 up to 60, and people wonder why it falls apart. It falls apart because it's pushing paper out. That's what it's all about, folks. How much paper can we push out, and how fast can we push it out? And
yes.
How long can we keep it up? Yeah, and I'm sure that they've been listening to Nico and Paige. And don't forget, you know, Nico and Paige are coming up at noon today, right after Steve and I. They're going to have Mr. Basil Chapman, Nico and Paige, Daryl, Dave White, and then we'll be back this afternoon. And of course, don't forget, folks, coming over, as you're over at TFNN, our man, Mr. Andy Hecht, he's got a webinar that's coming up next Wednesday. That's going to be on silver, the current setup in equities, futures, and ETFs. If you are a subscriber, it's a subscriber event only. You can sign up for his newsletter, though, for 1 month, absolutely free, and that will get you into that webinar.
Hey, Tom, we had huge price destruction in the Nikkei this morning. Do you have volume? Do you get the volume
I do.
on that? Okay.
Let me see if it's in already. 1 second.
That was some pretty big price destruction
volume.
that they had.
Monster volume.
Was it? Okay.
And you had the expansion, 1.7 billion, folks, and that's after making a high with 1.1 billion. And so if we bring this back, yeah, that was intriguing, man. So that's broken. Oh, see, watch this. This is crazy. So what it had done, too, if you're watching Tiger TV, folks, okay, when the Nikkei did, you know, nice bounce, and it was bouncing up to a downdraft that had been created in January of 2014. That downdraft had 2.2 billion, 2.2 billion, and then he went up there with 1.1. Isn't that crazy?
That's where these gaps are your friends, or these breakdowns or breakouts are your friend.
They are, and folks, this is any market, anytime, anywhere. This is the thing that blows my mind about. They all work the same way, And when Steve and I were on in the morning, bottom line, we were talking about the Nikkei a lot because that's when the yen was coming off the bottom.
Yes.
And the Nikkei itself, folks, okay, bottom line, sit there and wait. It's still going to be a buy. And the buy is like at 11,800. And you're going to want to buy it. The Nikkei is going to go higher. I know. I mean, because that yen, okay, that's a total change in trend. And you're talking about a change of trend. What is it, 35 years? I mean, it's some outrageous amount.
Yeah. It's a big one, that's for sure.
And you were doing business there and over there when the yen was weak too, right? So that had to be fun, right?
Absolutely. Yeah. It was. Yeah. Except that when I would be buying sake or what have you,
Yeah.
Cost me more.
Right. No, I know. And did you see what they're trying to do right now? But it would make sense that they could do it. They're trying to change the habits of what you eat with sake. I was reading this article 2 days ago. Yeah, and it totally makes sense because if you like sake, folks, I happen to like sake. Steve turned me on to it. Real sake, okay? And if you like it, it does taste good with a lot of different things.
Yeah. But nothing better than raw fish. Nothing better than some sushi or sashimi.
No, that's healthy. I know.
Let's make it Sake Friday, Tommy.
Sake Friday. I like it, man. I like it. Listen, folks, you stay right there, man. Basil Chapman's coming up next. Going to be growling with a problem with you. Steve, thanks so much, man. You have a great day, safe day, great weekend. Folks, you stay right there. We're going to come right back with Basil. Dow's up 46, Nasdaq's up 9, S&P's are up 6.5. Basil's going to be right back with you, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.